Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. India's trade deficit widened to a 5-month high of $15.33 billion in April. Export growth slowed down amidst weakening global trade and rising US-China tensions. In corporate news, Tata Chemicals will transfer its salt, spices and pulses business to Tata Global Beverages that will be renamed Tata Consumer Products. Hindalco is expected to report an operationally weak quarter due to lower aluminum prices, while Bajaj Finance and Bajaj Finserv are expected to report strong growth even amidst the liquidity concerns in the NBFC space. And the Election Commission has barred campaigning in 9 constituencies in West Bengal after incidents of violence between the BJP and the Trinamool Congress workers. It's going from worse to whatever level it can go to be honest, at least in the state of West Bengal. But I'm sure we've spoken about that already over the course of the last 18 hours. So let's take a look at the trade setup for the day and stick to markets. The markets have looked an okay place. Firstly, the developments that have happened, I think, in the US markets, in the US geography in the last 4 to 5 hours, the battle lines, as I think, are being drawn and cast in deep in sand. So what's happened in the most recent development is that Donald Trump has signed an order restricting Huawei and ZTE from selling equipment in the US. Huawei has also been put on a blacklist by the Congress that forbids it from doing business with American companies. So they are ratcheting it up even more. It's been taking up multiple notches. Remember, China has already retaliated in parts on $60 billion worth of US goods, and this should not augur too well for sentiment. However, the US markets recovered a lot of losses from the day's lows, and that was because this news had not come out until then, and because there was a delay by Donald Trump in levying auto tariffs. So markets are clutching on to whatever little bits of positive news that they can get, and as a result of that, after starting off lower, the US markets ended in the green. But this news is, their developments happened post that. Let's see if that has an impact on what the rest of the world does. So Asia, for example, is a mixed bag today. Nikkei is down about 0.78%. There is a flat trade that we're seeing in the rest of the Asian bourses. The SGX Nifty 2 indicating a start, which is, well, just about marginally in the green. But let's wait and watch what happens during the course of the day. Now, if we just look at the Indian setup, there aren't too many good news. Frankly, this morning I was wondering as to what is it that the bull can look forward to when he starts off the trade today, or when the index starts off trading today. So one, there's lack of buying support because the Nifty closed below key moving averages. Volatility is high. The India VIX is at the highest level since May 2014. This is the highest level since last elections, and that tells you something about how volatility has just gone up. You could argue that it happens every time during elections, but it's a high volatility level that we got to take cognizance of. Crude is inching up ahead of the OPEC meet. The crude market shrugged off the rising US stockpiles completely and inched up even higher, 72.19 now for Brent crude, which is significantly higher. The macro trends for India are looking weak as well. The trade deficit has widened to a 5-month high on slow exports growth. Keep in mind, the internals are not showing a clear trend because in the last data that came out, everybody was saying, oh, exports are starting to look okay. Now everybody's saying, oh, exports is faltering. So it's difficult to make complete sense of the trade data and give a comment on whether this is a trending move or whether these are one-offs that we can't quite dissect. But the headline number has widened to 5-month highs, and that should not augur too well for sentiment. And flows, as we've been saying, are deserting the Indian markets yet again. So FIs, after 2,000 crores day before yesterday, have sold another 1,000 crores, 1142 crores to be precise, in trade yesterday. So look at all the elements, and I wonder as to what is it that a bull can take heart from when trade starts today. Maybe it's expiry and the volumes will be higher and you can buy protection. That is probably one way of looking at it. We'll get to know about it during the course of the day. Expect volumes to be high today, expect volatility to be high today as well. It's the penultimate expiry before the election verdict comes out, so very important if an expiry today. We'll be talking to Agam about it a bit later on. However, while all of this will be monitored, what are the stocks that one should keep in mind today? 3 or 4 names that came out with good numbers, 3 or 4 names that came out with bad numbers. Let's try all of those. So strong quarter for Manappuram Finance, J&K Bank, Magma FinCorp. There's also Phoenix Mills, but essentially the financials that came out with numbers post-market hours seem to post a fairly decent number. Weak numbers though for some of the other companies. So Petronet LNG disappointed a little. Mahindra Holidays definitely disappointed. Majesco too came out with a set of numbers which are okay. The street is getting bullish at the margin on Majesco for a number of things that they are doing right. Somehow the quarterly reported numbers weren't the best, so do watch out for these names. Business consolidation. Now the news is, of course, that Tata Chemicals is going to demerge the food business to Tata Global Beverages. I won't dwell too much on it. We will talk about it in just moments from now. But keep in mind, the one thing that you need to monitor if you are a stock guy is that the swap ratio is in favor of Tata Global Beverages. So either Tata Chemicals could react slightly negatively, or Tata Global Beverages or Tata Consumer Products, as it will be known soon, could react positively. So do watch out for these two names in the session today. And Motherson Sumi, these stocks have been under pressure, but finally a lot of notes starting to come about the global trade tension and the impact that it could have on almost everything that is related to the globe. We saw how Tata Motors cracked yesterday. Motherson Sumi down 3.5%. This would be multi-month lows for Motherson Sumi as well. And there are target price cuts that are now coming in. So do watch out for some of these names. The entire auto basket, which derives large portion of its business from the world business, would be in focus. So watch out for Tamo, Motherson, Bharat Forge, etc. All of these would be in focus. However, let's tell you what's lined up on First Word today. The collection of the top editorial stories that we bring to you first up on the show. Has Tata Global Beverages and Tata Chemical deal done at fair value? Sajid Mangad Johnson with his assessment of the deal. India's not hungry for pizzas and burgers, and that's putting the quick service restaurants in a spot of bother. Agam Johnson to tell us why. And will Bajaj Finance remain unscathed in the fourth quarter? Shaif Ali Malik Johnson to tell us what analysts have to say and what is it that the street expects from the big number that comes out later today. Well, three things, but the first one, an important corporate development. We spoke about this yesterday, remember, on First Word, about the possibility of this happening soon, and it has happened. Tata Global Beverages will soon have a new name. The Tata Group has decided to house all its food brands under one roof. Tata Chemicals will transfer its salt, spices and the pulses business to Tata Global Beverages, which in turn will be called Tata Consumer Products, in keeping with its different verticals. Sajid Mangad is here to tell us if the deal has been done at fair value or no. Sajid, yesterday we were talking to Sanjay. Good morning, of course. We were talking to Sanjay about how it will be wrong to call this company Tata Global Beverages because it has a lot more. The deal has now been announced. What have you made of the deal?
Okay, so let's go through the deal here and look at from multiple perspectives and stakeholders. First, the deal. Deal is to transfer the entire branded consumer business of Tata Chemicals to Tata Global at a swap ratio 1.14 for every one share held by one share held in Tata Chemicals. So, in short, it basically means that it gives a valuation of the consumer business at 5,800 crores. There is no debt which is getting transferred, so it's a EV value of 5,800 crores in that sense. This is a business which is expected to grow to 5,000 crores as per the management commentary which came in May this year, which means that the revenues have to grow at least 30% a year to reach that in the next 3 years. So we are assuming that 30% revenue growth would take FY20 revenues to roughly around 2,400 odd crores, and an EBIT which is at 20% because efficiencies goes up. Currently it's around 17-18%. It will go up to 20%, and it will be at 480 odd crores, and the PAT would be at 360 crores at a tax rate of 25%. That's what we assumed. So that gives an EPS of nearly 14.1 for this company. At 5,800 crores valuation, it comes to nearly 16 times PE.
Of the transferred business.
Of the transferred business. Now, this is a consumer business which is getting transferred at 16 PE when at the time market valuation for consumer business is anywhere about 25.
At the least.
At the least. If you look at the peak ones, it will be going at 35, 40 times. You assume that, okay, let's give a discount to the top by 30-40%, you come to 25-26, but now it has been sold at 16 times to that. So that's an issue which is there, because if I am a seller of a business which is growing at 30%,
It's grown at 30%?
30% it will grow in revenues. Though then I would like to get a premium for that sale, right? But it's not happening in this case. But we can understand it's a group consolidation happening, so it's been transferred at some valuation which is there. So now look at the buyer from the buyer's point of view. Tata Global. Tata Global gets this business. It gets the total combined revenue would be around 200-300 crores for FY20. EBIT of 1270 odd crores and PAT of 1000 crores. That gives an EPS of 10.36. Compared to FY20 estimated EPS by HSBC of 9.4. So it's an earnings accretive for them as of now. Immediately there it's an earnings accretive for the Tata, and the value, and it values the company at 18 odd times.
So this EPS of 10.4, sorry to interrupt, comes in at the diluted equity base.
At the diluted equity base. Everything on the diluted equity base. So it's an earnings accretive and gives the company a P of 18 times. So it gives an upside for the Tata Global shareholders in that sense, because it's there's a consumer high growth business coming in. So you see a P re-rating of Tata Global coming in the next few months, or as we go closer to the deal getting consumed. The seller, let's look at the seller. The Tata Chemicals is a commodities company. This is the consumer business which is growing at a faster rate than the commodity business. Majority of cash flows was coming from salt and other businesses. That is now moving to global. So there is a growth issue which is there. Except that they have said that now they are going to concentrate on nutraceuticals, lithium-ion batteries for the electric vehicle segment. So all these things will take at least 3 to 5 years to come in, and we don't know how it's going to play out. Some of the brokerages are very apprehensive because in the near to medium term there will be muted return on equity which is going to come in from these businesses. So it's not going to be a business which was prior to the demerger of the consumer. It was running at a PE of 12 to 14 times. It will go sub 10 after this. So that is a negative.
So there is an earnings degrowth.
Where
there is a P multiple
downgrade which is happening, and discounted sale which has happened to FMCG business, which has happened. So this is what Tata Chemical is facing now. Look at the third perspective, which is who is the common shareholder between both the companies. I mean, the minority shareholders are not common between the company. Tata Chemical minority shareholders and Tata Global are different. The only common shareholder is Tata Sons. The management was very categorical when we asked about how accretive it will be. It said that it's accretive at two ends. One, combined TCL, which is Tata Consumer Products Limited. It will have an accretive EPS.
Okay, which is the current Tata Global Beverages
plus the consumer business.
Right.
Will have an EPS accretive. And the second point, it said that if you look at standalone of Tata Chemicals and Tata Consumer separately, it will be accretive. So it's neutral for the common promoter because it's accretive on both the ends. But if you look at individual shareholder wise, for the individual shareholders, it will be Tata Chemical shareholders will be at a loss.
Okay, so there is, Sajid, just to put this into perspective, there is a realignment of businesses in terms of the nature of the businesses, which is fine.
Which is a bigger role at a group level.
Which is at a group level. Yeah. But from a minority shareholder perspective, just to recapture what you're saying, for a current Tata Global Beverages shareholder,
it's a very good deal.
EPS accretive business. At a good valuation, and in all probability also results in a small PE re-rating.
Which happens.
Okay, so it's positive for Tata Global Beverages shareholder, the minority shareholder, despite the dilution that will happen. And it's negative for a Tata Chemical shareholder because the swap is not in favor and a high P multiple business goes out of its kitty and doesn't even get enough because it's not done at a valuation which is ideally filled. Because I believe in a conversation yesterday, I remember that a brokerage had valued this food business at much higher valuation.
And the brokerage was HSBC, which came out with its report after the earnings, full year earnings, and it said we are valuing the equity value of consumer business at 7,800 crores.
Okay.
That's at 23 P they given, which basically means they're saying that even at 23 P we are assuming a 40% discount to the peers.
Okay. And now it is being done at 5,800 crores.
5,800 crores, which is around 16-17p.
Nobody asked this question about the valuation?
Well, we did, but they said, oh, there's a fair valuation which has been done. There were legal opinions taken, and fair valuation was done by JP Morgan.
Okay. Well, I'm sure they would have followed the due diligence. Usually this group is not known for
the point is that
changing any group of shareholders.
It is you look at from a holistic point of view of Tata Group realignment, it is neutral to them because it's accretive at both the ends. But if you look at from the minority shareholders' point of view, one minority shareholder gains and other doesn't gain. And if you're selling a consumer business, you need to be selling at a premium rather than not at a discount to what market assumes.
Okay, well, so interesting. Let's see if it shows in the stock price reactions today. But Sajid Bangat, thanks so much for putting this into perspective. And in case this is not explanatory enough, I urge you to go onto the website bloombergquint.com and read up this story. All of these details are there on the website, so do log on and try and figure that out. Speaking of consumers, after automobiles, consumer durables and staples, all of which will fall under the consumer basket, the demand slowdown is now starting to reflect on quick service restaurants as well. Numbers tell the story. Two of the country's largest fast food chains, amongst the listed space at least, which is Domino's and McDonald's, have reported a slowdown in their same-store sales growth. Agam Vakil is here with the details. Agam, this is not usually a very large bucket, but it is a big bucket as far as sentiment goes. What are the commonalities between the two? What are the differences, and what are the trends that you've drawn from these numbers?
Well, Neeraj, I agree with you, and it's a very important aspect which will give you an idea about discretionary demand, specifically in urban areas. And this is a good indicator, reasonably good indicator. So I'm going to start off by talking about the same-store sales growth for both the companies, that's Jubilant FoodWorks, Domino's, as well as Westlife Developers, McDonald's. And as you can see, for the most of the last 5 odd quarters, we saw it in around the levels of around 15-16% in terms of same-store sales growth. In certain quarters, it was well about 20%. But that, after the last 5 quarters, has fallen to around 6% for both these companies. And this is for the first time in 6 quarters that they're showing not only a number which is below 20% and 10%, 15%, but it's in single digits. So this actually does tell you, firstly, and a lot of managements and traders and analysts will be quick to point out that this is also on a very large base. So that also, of course, comes into place because against a base of around 25%, you have a 5-6%, which many consider as reasonable. But that said, managements for now are not shying away from the fact, they're not denying the fact that there just could be a little bit of a slowdown. So let's talk about some of those challenges. So the high base effect is what I spoke about. There has been a slowdown in discretionary demand, according to managements, at least in the last 1 month of the quarter gone by. And there has been, of course, a steep rise in employee costs. And employee base was expected to would increase given the fact that they were hiring so much, considering business was so good for the last 1 year. But there are also a few positives, so it's not all bad. And in terms of some key positives, there has been considerable and consistent store expansion for companies, which is aiding growth beyond just same-store sales growth. So that of course is on track. We have no real pressure when it comes to input costs. Inflation has been largely stable when it comes to inputs, another very large expense for some of these companies, and gross margins consequently have held. And as far as your operating costs are concerned, well, there's been a reduced marketing, and that again has not had a very large impact as far as your margins are concerned. And rent remains stable again, because we know that it's not the best of years for real estate in the country, and which is why rent has not risen significantly. And yet, when it comes to management, well, they are cautious at this point in time. They are suggesting that they wait for another quarter to actually give them a confirmation of whether or not their certainly is discretionary slowdown in terms of sentiment. And of course, that said, they still expect the new stores, new product launches, as well as new formats to provide some amount of growth. But for now, there certainly is a little bit of uncertainty when it comes to discretionary demand in urban areas based on quick service restaurants.
Agam, I heard you mention that managements are a bit cautious, either in earnings calls or in comments otherwise. You spoke to Westlife, at least I know.
Yeah.
Did they give any kind of indication about when is it that they believe that the numbers could turn around, or could this be the new normal because of the deflationary impact that we've seen? I mean, if raw material prices are benign, maybe they have cut prices, and maybe therefore the same-store sales growth would also look a lot lower than otherwise. Any indications of that nature?
Yes, Neeraj, absolutely. Same-store sales growth are not going to be above 10%. That's something that's been acknowledged.
In FY20?
Yes, in FY20 and in the near term. But that is because you're saying that we are working on a very large base.
Okay.
Secondly, when it comes to discretionary demand, both the companies are not really into accepting that discretionary demand has slowed down, which is why they're saying that we want to wait for another quarter before we actually accept that there is some sort of thing that is happening, at least as far as our own business is concerned.
Okay.
And thirdly, perhaps the more important one is that they also want to wait for, after the elections get over, and that's when, because a lot of areas, there has been a slowdown because not a lot of families are coming out and have been dining out. This may be a one-off, but again, it may just be, something, we may start seeing a proper trend after the elections are over.
Okay, so let me ask you, for the next quarter results that come out, will analysts tone down their same-store sales growth estimates? We saw Jubilant, for example, 10 and 6, Westlife similarly. Will the new normal be 5 and 6 and 7?
Oh yes, this is something that the Westlife development management is saying. From here on, we're going to look at same-store sales growth of around 7 to 9% because the number of stores are in place and we have very large base. And from here on, the number of 6% was quite low. But 7 to 9% is what they are working with from here on. Okay. It's acknowledged by the management.
Okay, at least Westlife has gone on record with Agam in a conversation that you saw yesterday on the platform doing this. If you haven't seen, please go. I urge you again, log onto the website and try and search for that conversation, and you will hear that entire piece where Agam spoke to Amit Jatia of Westlife Development and asked him about all of these things. But Agam, thanks so much for putting all of this into perspective. Very interesting. Be mindful next time you read a report which speaks about a 10% same-store sales growth, just rubbish that. The managements have clearly stated that's not going to happen. To the big earnings for the day, we've spoken about earnings that have come out thus far and developments that have happened. Something that everybody watches out for every single quarter is what Bajaj Finance does. More so now, because it will come out with its fourth quarter numbers today, and investors will be keenly watching out for if the companies manage to remain unaffected by the pain in the system. Shefali Malik is here with the estimates. Shefali, now, will Bajaj Finance be able to dodge the bullet yet again? What are brokerages making of what the big boy could do?
Well, that's exactly the expectation, that they'll be able to beat all these uncertainties that we've been witnessing with regards to the NBFC. So from Bajaj Finance, the expectation is that we'll see consistent and steady performance, a profit figure of about 1,092 crore rupees. That'll be a growth of about 52% on a YY basis, and net interest income growth of roughly 40% to about 3,263 crore rupees. The AUM growth is also expected to remain strong in the quarter, 5% sequential growth and about 37% YOY growth. On a sequential basis, there'll be a slight downtick, but that's mainly because of the seasonal factors, nothing to do with the current uncertainties that we've been witnessing in the NBFC sector. And for them, the AUM growth will be primarily led by rural housing and the consumer segment. Even the incremental cost of funds is expected to come down for them from the peak that we saw in Q3. For most NBFCs, for them, it's expected to be a downtick from that level on. Margins, however, despite the incremental cost of funding coming down, the margins are expected to see slight downtick. Again, seasonal factors involved here, and also because of the fact that there'll be a slightly lower share of the higher margin consumer business. So that is one factor that we can look forward to, the composition of their business mix. The cost to income ratio, the company has been consistently putting in an effort to bring that down. So that's also expected to come down to about 35.4% versus 39.4% on a YY basis, and how they've overall done in the quarter, what kind of growth that they've seen in terms of AUM. All that commentary will be important to look forward to from this one particular company, which is the favorite, which has been the favorite of a couple of investors since last many quarters, and we'll see whether they actually maintain that kind of growth.
Thanks, Shefali, for putting that into perspective. That's what's expected out of Bajaj Finance. Keep in mind, when we're speaking to IDFC First Bank, V. Vaidyanathan, he mentioned categorically that the 30,000 crores book of Capital First, even in these times, has not seen delinquencies which are too high. So, well, remember, Capital First used to be a follower, in that sense, following Bajaj Finance's financials, so to say. So if Capital First has not seen too much, you could probably assume that Bajaj Finance, which historically has put up a very good show, might also come out unscathed. Let's wait and watch if that happens. The numbers come out somewhere between 1:30 and 2 p.m. So we'll be watching out for these numbers. 4.5% in trade yesterday ahead of the numbers, mind you, while the markets were down. Maybe, just maybe, the streets expect something quite material from this boy. That's all that we have on First Word today. Lots more lined up on Indian Open though. We discuss markets amongst elections and slowing economy with Ashish Somaya of Motilal Oswal Asset Management. He'll be joining us to talk about his thoughts. Decode the fourth quarter earnings with Kishore Patil of KPIT Technologies. And even amidst a consumption slowdown, India's trade deficit widens in April, a double whammy of sorts. Mr. D.K. Joshi of CRISIL joins in to talk about that. But after this break, a full tilt towards the day's trade.